Okay, welcome back. Manoj Muralidharan is Vice President Derivatives at Relegate Broking. Is joining us. Manoj, good to have you with us here. Thank you very much. What is positioning like, especially the FII segment and futures, index futures, and how are things set up from here out, in your opinion? The global sort of risk sentiment remains very weak still. Do you think here things can fall in line with what's happening globally, or there will be outperformance?
Good morning, Prashant. Prashant, I guess, if you just look back 6 days, the Nifty had a good positions of almost 1.28 crores, and just before the Fed event, almost 28 lakhs per share. So we entered the event with a light position. The Nifty, the net position for the September series was hardly 1 crore. And yesterday, after the V-shaped recovery that we saw in the second half of the market, around 7 lakh positions was added. So the equation is simple. 28 lakhs is out of the system, and a fresh 7 lakhs has been added. So Nifty still intact. Might be in this range of 17,500 to 250 more points, 17,750. But then, because now we are entering into the monthly expiry, I'm afraid the October series, especially from the banking side or the bank Nifty, has seen some short positions. So there is a possibility once we break 17,500, the Nifty has a potential to go all the way down to 17,100. But as of now, till 17,500 is not reached, we would maintain a range bound mode. It would be a sell and rise for the bank Nifty rather at this point of time.
And what about individual stocks? What are you looking at today?
We believe that for the first time, two major banking stocks like Kotak and HDFC Bank has seen fresh short positions yesterday. So we believe that follow-up selling might come in today's trade as well. So for Kotak Bank, try and buy a 1900 strike put option between 25 to 28 rupees with a stop loss of 10 and a target of around 30 on that. For HDFC Bank, we believe that 1500, 1503 is the resistance where the futures can be shorted for a stop loss of 1520. The target on the downside we expect is somewhere close to 1460 to 1470 on that.
All right, thanks a lot for that. Have a great day. Well, let's move on. Continue talking about some of the big stories. Anand Tandon is still with us. Anand, I wanted your thoughts on M&M because, they had spoken about how they're going to raise money for their EV unit, but no one expected it to come so soon. Now there are talks that they're going to be putting up $500 million for the EV push very soon in the next couple of months itself. The stock has gained 70% this year. Do you see more upsides?
Well, there could be because of the fact that the new SUV range has done reasonably well and there is a huge waiting list there. So obviously that now the acceptance in the market has been very high and that will finally translate into the numbers. The EV push is also useful, I think, because of the simple reason that without it, I think most companies will be dying. I think you will be getting to EV sooner than most people expect. So over the next 10 years, the market will completely change. And therefore, the earlier, the better. The fact that you are able to raise money and that you are raising money is also a good thing because typically Mahindra Group has not been great in terms of asset allocation within their group. That has been improving over the past, and so long as if it is raised outside, I think to that extent it helps to bring more discipline as to how the capital is allocated. So overall, decent news, but it's not very cheap at this level. Among the auto sector, however, it still seems to have the best trajectory of growth.
126 lower, so that's basically the first pre-open rates coming through. The Sensex is down, is up 50, but this is wild. It'll settle, it'll align and settle in the next many minutes of trade. So the pre-open has kicked off.
I think the Nifty seems to be a more believable rate for now. I mean,
going
by at least what the SGX was
By the way,
suggesting.
yesterday the market, it did come back into the green.
By the I know. So I won that bet after all.
No, you did not, because you forgot. I reminded you, so.
Okay. But back to the big story of the day, the mega consolidation that has been announced. The board of Tata Steel has approved the merger of 7 Tata Group metal companies with Tata Steel. Listed entities including Tata Steel Long Products, Tin Plate, Tata Metallics and TRF will be consolidated into Tata Steel itself. Kaushik Chatterjee, the Executive Director and CFO of Tata Steel, joins us now to talk about that. Mr. Chatterjee, good morning and thank you for joining us on CNBC-TV18. First, if you can just explain to us, what are the synergies that come through post the amalgamation?
Good morning. So I think let me start with the strategic rationale first, and then I think it will be easier to talk about the synergies. So firstly, I think after successfully merging and integrating Bhushan Steel, it was logical for us to look at the other subsidiaries which are of strategic relevance. And I think with these companies, all of these companies have, the businesses actually have a great future going forward. So first of all, it will be a simplification. And we have in the last 4-5 years taken out across Tata Steel Group about 120 companies. So these are now the operating companies which can grow in the future. The businesses are strong, whether it is the packaging business in tinplate, the ductile iron pipe business in Tata Metallics, long products. You've already seen we've focused on and doubled down on the acquisition of Neelachal. So all of these businesses are very strategic and will have a path in the future to grow and create value. So it was logical for us to then look at these businesses. So starting from procurement synergies, technology synergies, financing synergies, and all the operating synergies associated, it made a most logical sense to do this.
Kaushik, hi, good morning. Prashant here. Is there a number to the synergies you can put out there for our viewers annually?
So there is as I said, these are synergies which are pretty significant, and I think I won't put a number to it. I mean, we're working on those synergies just now, but it is pretty significant from an NPV perspective and also from a value leakage perspective. So possibly when we talk about post the Q2 results, I would be in a better position to articulate that, and it would be more relevant at that point of time because I need to tell the entire market about it.
Okay. Kaushik, good morning. How will the merged balance sheet look like, and what would be your plans to sort of deleverage from here?
So all of these are obviously EPS accretive for Tata Steel standalone. On the other hand, all of these were anyway consolidated because these are all subsidiaries. So after we the minority shareholders, the minority interest part gets absorbed. But otherwise, they were on its own already being part of the consolidated balance sheet of Tata Steel. So that's less of a point. The more important point is to drive the business in the future. And I think that is what will reflect very clearly on the Tata Steel balance sheet. And when I say Tata Steel, I'm always looking at consolidated balance sheet because that's the most relevant one.
All right. Hi, Mr. Chatterjee. Nigel on this side. I've been trying to reach the managements and they weren't talking. Now we get the picture why, in fact, they were in silent period. But Mr. Chatterjee, if you could give us a sense, in Q1, what was the additional royalty that was paid by both Tata Metallics and Tata Longs? Because they source iron ore from the parent, so that 22.5%. So for Q1, how much was it, this additional royalty?
Annually, the annual number is close to 700-800 crores. 700-800 crores? Yeah, so it is across all entities. And that's obviously something that will be part of the synergies, but there are others also which are pretty significant. So this is why I said it is a value leakage which will also be important.
So that's bulk of the savings then, that 700-800 crores odd?
Not all. There are other synergies also. I think the procurement synergies apart from the royalty are also very significant. Also, if you look at it, each of these entities have a high reliance on Tata Steel as a supplier customer. For example, we supply almost entirely the hot rolled coil substrate for tinplate, as an example.
Okay.
So all of that will get a part of the synergy.
So Mr. Chatterjee, if you want to put a percentage number to it, royalty as a percentage of the total savings will be how much? Very, very roughly.
So
50% more? Or,
no, not that high. It will. I'm talking about an NPV basis, so it will be less than that.
Okay. So less than 50% of the benefits will be coming in because of this royalty savings. Is that correct?
Yeah, part of that.
So then I'm assuming
royalty was effectively paid by Tata Steel.
Right.
It is to be asked from the subsidiary, whoever we got the permission to sell.
Yes.
And it would be paid by Tata Steel.
So I'm assuming that if this was a benefit of 700-800 crores, and if that's less than 50% of the benefit, then overall the synergy benefits will be in excess of around 1,500 crores.
on an NPV basis.
Okay, all right. So that's a large number then. You're going to be saving more than 1,500 crores. A quick question, Mr. Chatterjee. You know, there were revised guidelines that came out effective April 1st on related party transactions. Was that the reasoning, or was it more because of simplification of the group structure? Just want to clear that point.
No, we would have done this anyways, because I think, as you know, that we've been driving simplification across Tata Steel for some time, and indeed, if you look at it for Tata Group. So we were, as I said, that after successfully integrating Bhushan, which was much larger, more complex, this was the next natural step. We also had an impending merger of Tata Metallics and with TSLP, but with the NINL acquisition, the shape of the businesses of TSLP changed very significantly. So it made sense for us to then integrate all of it in Tata Steel, to make the verticals within the company rather than outside.
Okay. Sorry, Kaushik, you said this is EPS accretive. How much, how much would EPS
That's
go
what
up?
I said, Anuj. I'll talk about it after the Q2 results.
But any ballpark number that comes to
No, as I said, I'll certainly give you the numbers. Let's wait for the Q2 results, and then I'll do it with the open market.
Fair enough. And the name remains the same, right? Tata Steel going forward?
Yeah, absolutely.
Okay.
Mr. Chatterjee, earlier we were wondering whether or not you'll consolidate this, and that's happened. So simplification has happened. The street would have been wondering now whether going ahead you're going to simplify things even more. The overseas business has been volatile. India business is more stable. Possibly you can simplify things even more, separate the India business, get a lot of value for it, and let the overseas business be separate. At some point of time, will you think of demerging both these two entities?
It's, from an legal entity point of view, they are separate entities.
No, from a shareholder's perspective, sir. Because, the problem is in Europe, it's volatile. Sometimes it gives very good profitability. Sometimes it's a big drag. And now it's going to be going through turbulent times yet again. So that's the reason I ask you. Could that be a logical, practical step at some point of time?
If our board considers, it's all up to them. And I think it is important for us to understand that if you have seen the results in the last few quarters, Europe did give very strong results. This is a space, especially in mature geographies, where the volatility is high. But we have also learned to kind of manage these volatility. So we will have to manage these businesses to ensure that we can continue to grow in India and decarbonize in Europe.
You want to demerge both the two entities? That will be big value unlocking.
But what will you demerge? Because these are separate entities. They are entities.
List both the entities separately, sir.
Sorry?
List both the entities separately.
Okay. No, so you have to list it at a very different level, because the commodity markets and metals are different. So that's not on the table, as I can tell you at this point of time.
Overall, for the business, Mr. Chatterjee, how are things shaping up? Because steel prices have been under pressure. Demand has also not been too great globally. How do you see things over the next 6 to 12 months?
I think, as Naren has mentioned, that there is we had a very poor 2 months in the past, I think June and July, and also in August. But I think things are shaping up better. In Europe also, things are more stable than the last 2 months. Let's see where we finish the year.
Kaushik, sorry, you said to Nigel that not immediately, from the shareholders' point of view, to have two separate listed companies, one for India business and one for overseas. But in the future, is that something that you would look at?
No, I said nothing is on the table at this point of time.
Okay.
I think, let me be clear on that.
Kaushik, this is not, I guess, maybe the wrong question to put to you. But, I was looking at the TRF stock price. It's up 100% in the last 1 month. 110% in the last 1 month. I mean, looks like the market had a whiff of it. I mean, any thoughts at all?
I have no knowledge, but only thing I know is that the TRF was under the graded surveillance system for many years because of its financial results. And that in the first quarter results which came out, it demonstrated profits. And we've also changed the business model of TRF in the sense that it caters more to Tata Steel's engineering and project requirements. And I believe after the GSM was taken out, the prices have increased, what you see.
Okay, so
But beyond that, I have no other knowledge.
got that. Maybe that explains it. Kaushik, just that royalty bid, that 1,500 crores. Can you just so that this was, you said, paid by Tata Steel to who and how? You're saying that this is part of the synergy benefits. I mean, this will basically, Tata Steel will retain this amount, right? Right?
No. This is this is a part of the royalty as far as the new mining amendments that happened in the mining bill. It is to be paid to the government for every ton of ore which is sold. And we had the permission to sell it to some of our subsidiaries because they are historically been captive to Tata Steel's ore.
Yeah.
So that is the additional cost that had come. It's
Okay,
not
got that.
1,500 crores. I gave.
Sorry, 700. I
NPV
it is extra. No, 700
cost
crores.
saving.
yeah, and it is it's an NPV number I gave. So
Okay.
NPV,
I
yes.
think it is. Yeah. So I think it is.
Kaushik, sure.
It is material.
Got that. So 1,500 crores is the total cost saving because of the amalgamation. I wanted one figure on the debt. Post amalgamation, what will the consolidated debt be that you're taking on board, and how much could you perhaps take it down by over the next 12 months?
So this does not change in the consolidated debt because all these companies, as I mentioned earlier, has been consolidated with Tata Steel. So there is no change in the consolidated debt, and we continue to watch the. I mean, this has been a challenging year. So we will continue to focus on it.
Kaushik, just one word. You can correct me if I'm wrong. But what about tire rolls? That's another company in which Tata Steel has majority stake, right? I mean, that's insolvent, I guess. But the shares still trade.
NCLT.
Sorry?
Yeah, but that's in NCLT.
Okay, so is that the reason why that was not considered?
That is actually in NCLT. It's not in an operating company any longer, so that has no future value for Tata Steel.
All right. Very quickly, Mr. Chatterjee, in the past I've asked you this. We have seen that you have announced this merger with Tata Metallics, I recall, close to around maybe 10 years or so ago. This time it's happening, right? This is going through. No reconsider after this.
No. There's no reconsider after this.
Okay, I think, Kaushik, just one last thing. Have you been in discussion at a Tata Group level where, we could see this kind of consolidation at a different, in the IT services business, etc. as well? Is this a group thinking to kind of consolidate businesses into one large entity where you have separate listed entities?
I wouldn't have the ability to talk about other Tata companies. I can only talk about Tata Steel, and this is what we're doing just now.
Got that.
Right, Kaushik, thank you so much for joining us. All the best with this exercise.
Bye.
Okay, that's Tata Steel. That's the big CNBC-TV18 exclusive. The market's opening, and it's actually, again, much better than what the SGX Nifty prepared us for. The mid-cap index actually couldn't care less. But, let's wait it out. The first rates, of course, Nifty is down 32 points. The Bank Nifty has been showing some weakness off late, down about 200 points on that. The HDFC twins, both are down about 1%. And that's the worry for the market, is the FI is selling back. Because if that is the case, then that straight away goes into these stocks. And that's why you're seeing that move. The Nifty is cutting its losses, though, now down just about 6 points or thereabout. But banks are weak. Kotak Mahindra Bank is down. HDFC Life is a bit weak. SBI Life, Axis, IndusInd. Suffice to say that, the financials are starting on a bit of a back foot. Tech Mahindra has had a bit of a downgrade. I think that stock is starting 1% lower. Coal India is down about 1%. The Nifty has moved in the green, so let me now go through the stocks leading it. Tata Steel, of course, is your stock of the moment. 2.5% higher than the management was hearing what Kaushik was telling us. So 4% higher now, by the way, on Tata Steel. This is looking like a big move. Then, of course, you have a couple of others like ITC, Bajaj Auto, Shree Cement, Hero MotoCorp. These names doing well. But really, the stock of the moment is Tata Steel. That's up about 4%. Because the market believes that there will be synergies and EPS upticks. So let's see if this sustains or not. That's going to be more important. The Nifty is taking one more leg down, by the way. 45 points down on the Nifty. And this is courtesy of the financials. The HDFC twins right on top, which is not indicating well. If you track the FI flows. Sonia, over to you.
So, for Tata Steel, right, just to reiterate, the management themselves said that there will be a cost saving of 700 to 800 crores on the iron ore royalty paid between the subsidiaries and Tata Steel. And overall, there'll be a 1,500 crore plus cost saving because of this amalgamation. And that's a big figure. And that's something that the street is pricing in. So Tata Steel up 3.5%. Tata Steel long products, Tata Steel metallics are all under pressure right now, down about 2 to 4 odd percent, depending on the ratio. Tin plate is down about 4.5%. So keep that in mind. But the entire group is definitely in focus this morning. Apart from that, you have Paytm that's up about 2.5% on a positive brokerage report. There's Adani Wilmar that has been moving with a lot of strength. KPIT Tech has been up. It's up 17% this week post the acquisition. Some of the paint companies are doing quite well. You have cement companies that are coming back into action. Something like a Nuvoco is up about 0.6%. M&M Finance is in the news, so keep an eye out on that. M&M Finance, in fact, is just get that stock up for you now. It's down about 8%. So that's definitely a big stock on our radar this morning. M&M Financial and big volumes traded there. Fortis continues to be in the red, down 2.5% there. And overall for the market, it's not a bad outcome. The headline index is soft, down about 68 odd points, but a lot of individual stocks in focus.
Oh, yeah. I mean, lots of individual stocks. 70 points lower, 71 actually. We're at about 17,551 on the index right now. So it's slow and steady, but it's coming. I mean, the cut seems to be coming. Market breadth is 1:1, so there is not very much by way of that. So banks are lower. Fortis is down another 3%, as we just highlighted, 257. Yesterday's low, I think, was 250 with a big crack. So that's going down. Mahindra & Mahindra Financial Services is down 7.5% on volumes, by the way. There is Tata Motors, which is down 1%. Tech Mahindra is down about 2%. IndusInd, which has had a one-way move to about 1250, which was the recent high, is back at about 1200. What else? Tata Steel Long Products is down 8%. Maybe we can have a stack of companies, all those listed entities which are coming, which are going to merge into Tata Steel. Maybe will be helpful to sort of look at it in one shot. There is PI Industries, which is down 1%. Chola Finance is down about 2.5 odd percent at this point in time. What else? I mean, that's the bulk of it. Escorts is up about 2%. Dish TV is up 7%. KPIT starts another 1% higher on the flip side, on the higher side. Adani Wilmar is been higher. That's up about another 1.5 odd percent as well. So that's what we have going right now. A market master of the day is Dheeraj Agarwal. He's Co-Head Equities, Ambit Capital. Dheeraj, great to have you back on the program. Thank you very much for your time. You know, we're down about 17 now, but on any time frame, a month, a quarter, you want to stretch it to a year, just amazing amount of outperformance, relative outperformance, absolute outperformance to the big market, which is the US market, and of course to other emerging markets as well, Dheeraj. What's your sense? Where do we go from here?
I think the outperformance continues. So a number of things in India which actually protects us from the current mayhem which is happening globally, particularly on the rates and the currency side. Our total external debt to GDP is very, very manageable and very low at about 20%. And that, I think, is one of the biggest factors which shields us from the happenings of the global market at this point of time. Second, remember that we didn't fall into the trap during the COVID time of just going ahead and printing and pumping money. Some of that is coming back to roost at this point of time in many markets in the world. We also have an inflation issue, but far lesser and far more manageable as compared to many other economies. And of course, I mean, blow-ups if we're talking about emerging markets, look at the big bets or some of the big bets GEM investors made 2 years ago, including Russia and China. And for reasons specific to those two countries, those are blowing up. So India really stands out.
Okay, the Nifty low is 17,539. We're at 17,551 now. Why is that important? Yesterday's low was 17,532. So in a contracting market, you do tend to take support at previous day's low and then tend to make a move at the pivot if that happens. So it'll be interesting to see if the market's made at least the first hour low and can move up. Dheeraj, hi, good morning. The big debate is on the big sectors, right? Financials and IT. How are they going to perform? Financials have seen big outperformance. IT has seen a big underperformance. I'm talking about the last 6 months. Your view on both these big ones?
We think the trend continues. IT is exposed to global markets, particularly the US. And despite the fact that IT stocks are down between 30-35% in the last 6 or 8 months, if one looks at valuations, they are still about 20% premium to the average valuations pre-COVID levels, whereas the growth is actually trending back to its normal pre-COVID levels. The bump that we saw during 21, 22 is actually normalizing very, very fast, both on growth and margins. Banks, on the other hand, at this point of time is in a sweet spot. The margins are looking quite okay. Volumes, which is the credit growth, is rising. There is no NPL issue at this point. Purely domestic focused sector, absolutely no impact of what's happening globally. So despite the fact that a few banks are probably reaching valuation levels where they're no longer, I would say, cheap or have a large upside anymore, but they continue to outperform, we think.
Okay, they continue to outperform. Dheeraj, good morning. I wanted your thoughts on, the topic of the moment, which is the Tata Group, the Tata Steel amalgamation of its 7 subsidiaries. We just heard from the management where they mentioned that there's about 1,500 crores of cost savings that they'll see because of amalgamation. Now, these are what large groups do, and they do well, right? I mean, this is a great way to sort of simplify the group structure, bring in synergies. It's good for shareholders as well. But on the other hand, you also have the overarching theme, which is a slide in metal prices and lower demand. So how do you approach a name like Tata Steel?
So we like metal space. In fact, I'll try to answer your second question first, because the first one we'll have to look deeper, although it's obviously a simplification of structure, which is very, very welcome. But on the second one, there is a weaker global demand. There is slide in metal prices. But this is very, very different from other metal recessionary trends that we have seen in the last 25 years. In every other previous weakness cycle for metals, the metal companies typically tend to drop into losses because of high amount of leverage on the balance sheet and very poor cost management. As compared to that, let's say Tata Steel, the name that you quoted, Tata Steel in this down cycle will still make more than 10% ROE. So typically metal stocks, if you buy in a down cycle and just hold it for some time with patience, you make a lot of money. And in this down cycle, if Tata Steel is making 10% ROE, if you invest here and hold it for 2 years or 3 years, there's a lot of return to be made. So metals are clearly in an accumulate phase according to us. This down cycle is very, very different from the previous down cycles we have seen.
Okay, down cycle very different from previous down cycles we've seen. Dheeraj, so what is the research team really focused on at Ambit in terms of trying to find opportunities? You guys put out, a list of ideas, largely mid and small caps, which could do well. Very diverse sectors, interesting names, lesser talked about. Is that the segment to really focus on with, larger caps perhaps more or less fully priced?
Mid sectors are basically so diverse that trying to paint them in one single brush and just looking at it from an index level becomes slightly difficult. Because the 80-20 rule works really well in the mid and the small sector. Only 20% or maybe even less than 20% of the companies actually tend to do very well and are actual value creators. And hence, if you try to look at them at a basket, sometimes you feel underwhelmed. For example, even in the last 10 or 15 years, the outperformance of the mid-cap index over Nifty is just 120 basis points per year. It's not that significant considering one thinks there should be better outperformance investing in younger and faster growing companies. So our mid-cap approach is clearly more bottom-up, look for very, very high quality, high growth companies which can sustain a little bit of toughness in the environment. And we've been doing a lot of work around that. Some of the fantastic thematic work that we have done in the recent past is how smaller companies and even larger companies create sustainable value if their incremental ROCs are better than their WACC. And this is actually reflected not just in P's and price to book, which sometimes appear overinflated, but in their EV by IC. So a lot of good ideas out there, but in the current environment, one has to find a bit harder to find them.
The market's very volatile. It's sort of trying to protect yesterday's low. Infosys is trying to sort of come back a bit and help the market. But the bank Nifty has turned weak all of a sudden. A lot of this could be attributed also to the way the currency market has moved and also the fears of FI outflows. Because, the names like HDFC Bank, Kotak, HDFC, these are the names which are dragging it. There was a nice outperformance building in for these stocks, but now all of a sudden there's this decline. And my sense is most of this is macro in nature because of what's happening, especially in the currency market. Dheeraj, we saw a nice bit of inflows into August. The general belief was that it was a lot of ETF money which came in because, it sensed some outperformance for our market and there were problems with other markets like China. Do you reckon this could be at risk and we could go back to the larger trend of FI outflows?
We think that the worst of the outflows is behind. So if you see cumulative outflows between October and till June or July of this year, FI sold roughly 230, 240 basis points of India's market cap, which is actually slightly higher than the net selling that we saw during the GFC months, which was also around about 200 basis points of India's market cap. So, two data points doesn't make it a trend, but I think it's fair to say that bulk of the froth, hot money, profit booking, leverage money, whatever you call it, is probably taken out. But at the same time, I would like to caution that the strong inflows of $8-9 billion that we saw between August and first half September, that pace also may not continue because a lot of focus at this point of time is on how high the US rates can go, how high the US 10-year can go. What does it do to overall flows? What does it do to the risk assets? India is not considered to be a risk asset anymore, unlike many other emerging markets, but it can impact a little bit of flows. So I would not extrapolate the strong inflows of August and September, but I would also think that going back to the huge selling that we saw between October and June is probably not going to get repeated.
Okay. We spoke about the metal space, the IT space, but, one space that has done really well in this week itself is FMCG, whether it's HUL Britannia, ITC, Titan, they've come back in a big way, paint companies as well. This domestic consumption theme, is it something that you like? And if yes, which pocket offers both value and growth now?
Actually, FMCG is very expensive at this point, so there's no value there. The thing which is working in FMCG's favor in the short run, and it's been working not just this week, but if you actually zoom out a little bit more over the last 2 or 3 quarters, is finally they are seeing some softness in their raw mat cost pressures. And hence the huge GRM cuts that we saw for FMCG in, let's say, second half of 21 and first half of 22 is beginning to soften. But at the same time, a lot of FMCG companies have taken very steep price hikes, but nobody is actually rolling back those price hikes. So there could be some positive margin reports which will come in because of this particular factor, and that's what is helping that whole space, some less, some more. Also, there's a slight bit of volatility in the global markets once again, the typical rush to defensive sectors, etc. That also drives a little bit of a money flow.
Dheeraj, it's a pleasure. Thank you very much as always. Good speaking with you here on the channel. Thanks indeed. Well, just like there is the stock market here in India is held out against what's happening in the rest of the world, the currency market has also done that with, of course, a fair bit of help from the Reserve Bank of India, which has been defending that 80 level, but not anymore. The rupee is at a new record low, that is, against the dollar, 81, and Lata is here to tell us more. Lata.
Well, 81 was on the cards, one, because the rupee closed at the lowest point yesterday, 80.86. And in New York, in the NDF trades, already 81 had been hit. So that is not the surprise. The shock for the market is actually the Reserve Bank intervened all of yesterday, all of Thursday. It was offering, and there are some people giving fantastic numbers, like maybe even 3 billion was sold. But the point is, that was the hunger for dollars yesterday. As we know, there was a goodish bit of portfolio outflow. Apparently, there was also some M&A related outflow. So if the number is not as large as 3 billion, it is fairly significant. So in spite of the intervention, the market has gone where it went, above 81 as of now. There was a slight stoppage in the fall of the dollar yesterday, the fall of the rupee yesterday, when the BOJ intervened, which is, one in several decades event. Because of that, people shorted the dollar. And those short positions got covered by end of day. And that also led to the sharp spike in the end of day trades. For the market now, it's just that what is RBI doing? I mean, if the RBI normally doesn't intervene when there is genuinely outflows happening, why would you want to get those guys to get a good rate? Let them pay more. So they would normally stand out. Yesterday, they did stand in to smooth the sharpness in the market fall. But now, if there are continued genuine outflows even now, the Reserve Bank may just allow the market to find its own level. At one point where they feel that now there are speculative longs being accumulated in the dollar, they can come in and do a slam dunk. But, that is when the market will also sense that enough is enough. At the moment, I couldn't get a single dealer to tell me, is 81 a support, is 81.25 a support, is 81.50 a support, is 82 all the way. People are not guessing because these are not technically doable. This is just where the Reserve Bank might think that, okay, now it is getting speculatively long for the dollar. Just a word on bonds. We aren't talking enough about that. It is almost a rate hike that has happened. If you looked at the OIS market, it's almost 25 basis higher from what it was before what the Fed announced. Everybody is coming to terms with the fact that the Fed is a terminal peak rate at 4.6 was not guessed by anyone. And interest rate differential is a real thing for any central bank. And therefore, now a 50 is getting factored in or has gotten factored in. That's why you're seeing this 25 basis move in OIS markets and almost 20 basis move in the spot markets as well. It's continuing. We were at 723 on the 10-year before the FOMC. Now we are at 738. So fairly sharp impact.
This is a big sell-off, Lada. Thank you very much for that. So that's a pretty comprehensive look at the currency. Look at the market go 125 lower, and this has all happened in the last 3 minutes of trade. I mean, actually, that's exactly 3 minutes. The markets lost significantly, 70 points or so, just like that. We were at 17,584 at 9:30, and it's 9:33, and we are at 17,500. So that's
the algo trades.
No, I think
Anuj, I wanted to ask you that. If there is an unexpected 4.5% return by the risk-free instrument, then an overall risk selling of risk assets won't happen, and then can we stand?
Absolutely, and I think this is a point I've been making for the last few days. Even the last editors roundtable. When there's a big move happening in the money market, there's a massive global risk of, and our market was holding out for some reason. And I think this move on the dollar rupee, I think this is really something which has fueled it, which has really triggered it, because when you have 80 was gone and now 81 is here, and you've seen the profile of stocks which is falling, which is leading it. The HDFC Group, Kotak, basically the FI favorite names. After yesterday's FI selling, the month-to-date number is now almost next to nothing. In terms of FI number, and for all you know, we can now start to get into net negative number for the month. So there's clearly FI selling because of what's happening with the currency market as well. Yesterday, by the way, there was some huge moves in the currency market, and you saw the move in dollar Japanese yen, which I think is by far the second biggest sort of
one-day fall.
And also the biggest currency after the euro, the Japanese yen, and the kind of moves that it had here. So. We are living in unprecedented times.
BOJ interventions after 97 or something. I remember I was a cub reporter then. Yeah. And, we have never heard of a BOJ intervention. So clearly, we are living in uncertain times.
In Japan, there is a fair bit of disconnect between what the Bank of Japan wants and what the government wants. So both are kind of pulling in different directions.
This is a theme in many countries. Japan is not out. Okay. I just wanted to add, again, something, Prashant, Anuj, if an FII is coming in, and they see that you can get more for my dollar if I waited, wouldn't they wait? Even those who want to come in, why should I come in at 80 when everyone is telling me that I will get 82 rupees if I came later?
This is clearly a vicious cycle.
So that vicious cycle plays for a bit.
Also, this August inflow that we had, which really ballooned up the market a lot, on top of the domestic liquidity, which anyway was supporting, was the risk was how much of it was ETF driven, pure ETF driven. I think we're still trying to get some sense of that, because that money doesn't care. If it doesn't get momentum, it leaves.
The Credit Suisse report said it was an outsized ETF.
Yeah.
Okay, well, for the market, don't lose sight of what's happening. The Sensex is now down 500 points. The Nifty is down almost 145 points. So once again, that downtrend is resuming. That brief green that we saw yesterday.
I know you're itching to make a wager, Sonia. Again, no.
The brief green that we saw yesterday is a thing of the past, right? At least for now.
If the colours are anything to go by.
If only we could make that call. But anyway, let's do one thing. Let's move on now. we have the city gas distribution companies that we're looking at. There was a very interesting note by UBS which suggested that the delivered gas cost for the second half of Q2 is 30% lower than that for the first half of the quarter. So they see gross margins for September now being 25 to 40% higher than what we saw in Q1. And this could allow companies to fully or partly absorb a potential increase in domestic gas prices from October. So to discuss the movement in prices, Pawan Kumar, who's the Director Commercial at IGL, joins us now. Mr. Kumar, I want to first just get the numbers from you, right? How much have gas costs gone down by since the increased allocation to the city gas distribution space? And there are some brokerages that estimate that prices have gone down by 30% in Q2. Is that accurate?
Yeah, good morning. In fact, the prices have been fluctuating on month basis, and the highest prices were during August first fortnight, when the prices were around $10.52 per MMBTU. Currently, in this month, after 15th of August, the unified base price is around $6.26 per MMBTU, and we are getting around 90% of the APM, non-APM gas, and 10% we are mixing from RLNG or spot, which is costing on an average around 17 to 18 dollar per MMBTU. So average cost input gas cost is around 8.5 to 8.8 dollar per MMBTU in the current month.
So 8.5 to $8 per MMBTU in the month of September so far, right?
Yeah.
Okay. The domestic gas prices are expected to go up further by almost 100% from the 1st of October. What would the impact be for you?
See, as a IGL, we consider ourselves as a socially responsible company, and we have promised to deliver the lowest cost CNG to the consumers in the national capital territory. And in the short term, we can absorb any hikes. So we will not pass on to the consumers. We are working on two-prong strategy to reduce our internal operating expenses and to maximize sales, because the EBITDA per SCM might be little down, but if we maximize the sales, the overall profit margins remain. We are trying to strike a balance between the consumer's interest and between the investor's interest.
Mr. Kumar, could you two things? One, how much of the gas that you are getting is locally sourced? How much is being imported? And I think the last time we spoke, we did discuss what happens when demand rises, you need more. Will the government divert more gas away from other sectors to you? When you kind of said, well, we don't know yet. Any update on that?
You might be aware that government is already, working on the customers, ease of getting CNG and PNG at an affordable price, and some committee is already on the job. We expect that as the government is giving impetus on increase of gas in the energy basket from 6.8 or 7% to around 15% in next few years. So definitely the favorable price mechanism will be in place.
At the end of the day, gas is required, as you said. I mean, the proportion of it in the energy mix will go up, but there are other sectors as well, right? So it's a choice how much you, unless of course there are big discoveries here, and but that also takes time. So what is left is imports. So what can be done according to you?
We expect that the geopolitical situation will calm down, and the prices of spot will also cool down as it was earlier. And this is a short-term turmoil which people should absorb and should not pass to the customers, so that the CNG conversion is encouraged and the consistency in sales volume growth is maintained.
Do you think there could be a ceiling to gas prices? Is that something that the government is perhaps considering, or something that they have spoken to you about?
I'm not aware, but we are hopeful that something favorable will come from the government.
Okay. I want to ask you, are your contracts sealed at a fixed price? I'm asking because there are some reports that GAIL is perhaps facing some issues in supplies. Reports were indicating that the spot LNG has been procured by GAIL at a very high price. would that impact sourcing from your end in any way, or are your contracts fixed?
See, as far as IGL is concerned, we have our well-diversified portfolios where we are having long-term and short-term contracts, and we are not mixing the spot gas at the moment. So, plus gas is not impacted by that phenomena.
Okay. Mr. Kumar, good morning. What about expanding to newer geographies? I mean, I think you're largely a Delhi-specific company, right? I mean, but any bidding rounds by the government?
I think bidding is already complete. Almost 95% of the geographical areas have been bid. Now, what we are looking for, there are some the CGD companies which are coming for sale. So we are aggressively going to bid for them so that we acquire new GAs in other areas and we become a pan-India company.
Which are these CGDs, Mr. Kumar, which are coming up for sale? Which are these CGDs coming up for sale?
There are some CGDs in Maharashtra, Karnataka, where they are already on sale.
Maharashtra, Karnataka, but smaller in nature, because in Maharashtra, of course, we have the big one is MGL, but the smaller ones.
See, as a strategy, IGL is looking to diversify to other areas. Wherever the new companies are coming up for sale, we will be bidding aggressively.
Okay. So what happens to your overall growth in terms of, your volumes, etc.? You had guided for, I think, 8 MMSCMD of volumes in FY23. You think you can do better than that?
Definitely, we have already crossed 8 MMSCMD per day. And if we consider the sales growth based on historical basis, we are growing at a 13%. And the vehicle conversion and the new vehicle CNG buying is also good numbers are coming. So we expect that there will be substantial growth as far as we are able to maintain prices favorable to the consumers, and there is an arbitrage to the alternate fuels.
So when you say new CNG buying has gone up, I mean, of course, on the road as well, you're seeing more CNG cars. Demand has picked up in a big way for players like Maruti, etc. But can you quantify for us what kind of volume growth have you seen?
As far as numbers are concerned, there are commercial vehicles, there are new cars, then there are retrofitment, and the average number in the NCT of Delhi is around 17,000 it varies from 13 to 17,000. Currently, it's around 15 to 16,000 last month. And as far as the numbers for first fortnight is concerned, that data is also encouraging in this month.
Mr. Kumar, just to pull on that acquisition, which are these companies, sir? Or are you saying they must, since you're talking about it, you already obviously know these companies?
I think it will not be fair on my part to comment on that because that's something, business.
These are private companies?
Yeah.
Oh, okay. Private companies, and which part of the, which geography specifically?
I will request you not to, drill in this question more.
He said Maharashtra and Karnataka, so earlier, of course. Mr. Kumar, thanks a lot for joining us. Good talking to you. That's IGL. The market, by the way, this RBI move on M&M Financial is something we really have to understand now. I think perhaps Abhishek could come and explain this to us. This really is the stock of the moment. 10% and counting. I think it's on temporary freeze. In the futures market, the freeze is open. In the cash market, it's not, which is very interesting. In the futures, it's now down about 10.5%. So not really headed towards that 15% downtick. But just look at the Bank Nifty now. 2% down is what you have on the Bank Nifty. 40,000 is effortlessly gone. Forget about 41,000. So that 20-day moving average is now, 20-day exponential moving average is now gone on the Bank Nifty. But this looks more like a heavy-duty selling, more than just the moving averages play. It's clearly a bit of a macro call which has been taken, and the way the stocks are selling off, and the Nifty at 17,442. This is looking a bit ugly right now. Advanced decline as of now is about 1:2.5. We'll take a break. Up next, Vishal Bhul of Whirlpool India will be joining us to talk about their new laundry portfolio and its expansion. Later, of course, we'll connect with RP Goyal of NHPC to discuss their outlook in the hydropower sector. Stay tuned.